Welcome back to the deep dive. So you've handed us a really fascinating challenge today. We have a whole stack of sources on something called activity-based costing, or ABC.
Hmm.
And our mission is to, cut through all the accounting jargon. We want to give you the bedrock knowledge of how it works and, more importantly, what surprising truths it can reveal,
It's really about solving a critical business mystery,
which is
cracking open that black box of overhead costs. All those expenses that aren't direct labor or raw materials.
right.
Traditional accounting systems, they're fine for, official reports, but they tend to lump all that overhead together. They just spread it out.
Hmm.
And that leads to some major distortions.
Which means businesses can make some really poor decisions. Like they might raise prices on a product that's actually a huge winner or keep pushing a product that's secretly a money pit.
Exactly. They feel busy, sales look good, but the profit just isn't there.
And that's where ABC comes in.
It's the lens that brings everything into focus. It forces you to look at how you make things, not just what you make. And to do that, we're going to walk through a really fantastic, tangible case study, Lily's Ice Cream Company.
Okay, I like this already. So by the end of our deep dive, you'll see how Lily went from thinking all her gourmet flavors were winners to realizing her simple vanilla ice cream was basically funding the entire operation.
It's the difference between guessing and knowing, between managing by gut feeling and managing by, economic reality.
So where do we start?
We have to start with the building blocks. If
Yeah.
you get the structure, all the math that comes later feels really intuitive.
All right, let's lay the foundation. The first big concept in ABC is something called a cost pool.
Right.
In simple terms, it's just a bucket, right? You collect all the overhead costs that are related to one specific activity. So for Lily, we could have a pool for all the costs of setting up a batch of ice cream.
And that's the first big shift. A traditional system might just have one giant pool for the whole factory,
One bucket for everything.
one massive bucket. And they'll allocate it based on one simple thing, like, say, how many gallons you produce in total. But the reality is, not all costs are driven by sheer volume.
Okay, so the magic of ABC is breaking that one big bucket into several smaller, more accurate ones, each with its own unique activity driver.
Precisely. And our sources say the key is finding a reasonable number of pools. Not too few, because that's inaccurate,
Yeah.
but not too many, because then it just gets way too complicated.
So it's a balancing act.
It is.
Yeah.
And the system itself gives you a really logical way to think about it. It categorizes all these activities into 4 distinct levels.
And these 4 levels cover pretty much every dollar of overhead.
Almost every single penny, yeah.
Okay, let's define them, starting with what sounds like the easiest one, unit level activity.
Unit level is exactly what it sounds like. It's a cost you incur for every single unit you make. For Lily, if she makes 1 more gallon of ice cream, she incurs this cost.
So like the electricity to run the machines?
Perfect example. The sources mentioned about $200,000 for electricity and another $400,000 for machine depreciation. Those costs go up with every single gallon produced.
Got it. Now the next one sounds a little more complicated, batch level activity. This is a big deal, isn't it?
This is a huge deal. Batch level costs happen every single time you start a new batch, and this is the key. It doesn't matter how big that batch is.
So setting up for a 50-gallon run costs the same as setting up for a 5,000-gallon run.
Exactly the same.
Yeah.
The setup time, the quality check, the machine cleaning, it's all fixed per batch. And the sources had a great insight here.
Oh, yeah.
This found 85% of the repair technician's time wasn't from machines just wearing out. It was from the stress of all the stopping and starting between different flavors.
Whoa. So if she just made one giant continuous batch of vanilla all year.
Almost all of that repair cost would just disappear. It's a cost of variety, of complexity in the process, not a cost of volume.
That's a powerful idea. And the sources made a point to say that warehouse storage is usually not a batch activity, right?
Right, that's a small but important distinction that's usually considered part of the next level up.
Which is product level activity.
Right. This is the cost of simply having variety in what you sell. It's not driven by units or batches, but by supporting a specific flavor or product line.
Give me an example for Lily.
The salary for her flavor chemist who invents the new recipes. Or maybe some special equipment that's only needed for one of her gourmet ingredients. It's the cost of just keeping that flavor on the menu.
Okay, that makes sense. And the last, broadest one, facility support activity.
These are the costs that are just there. They keep the lights on and the building standing. Property taxes, insurance, the security guards. For Lily, that was about $280,000. These costs don't change whether she makes 1 gallon or a million.
Okay, hold on. If we're trying to get super accurate product costs, and these are real expenses, 280 grand is a lot of money, why do the sources say you generally shouldn't allocate them to the products?
That is an excellent question. It gets to the whole purpose of ABC. Its goal is to help managers make better decisions, not just for financial reporting.
And allocating property tax to a pint of ice cream doesn't help with a decision.
It actually hurts it. Think about it. If you load up the gingerbread flavor with the share of the property tax, it makes that flavor look less profitable. But if Lily decides to stop making gingerbread, she still has to pay the exact same property tax.
I see. So the cost isn't really caused by that flavor. You're trying to only link costs to the products that actually drive them.
You got it. It keeps the analysis clean and focused on what managers can actually control.
Okay, so with those definitions in place, let's talk about Lily's total overhead. It was what, $1,740,000.
A little over 1.7 million, yeah. And under her old system, she would have just smeared that whole amount across all 1.5 million gallons she produced.
But the ABC analysis, when they actually built these pools, what did it find?
It was, well, a complete game changer. The big revelation was that most of her overhead had nothing to do with volume. Right. Only about $750,000, that's just 43% of the total, was truly unit level. That's the part the old system was actually good at measuring. The rest, almost $1 million, was the hidden cost of complexity.
Wow, okay, break down that $1 million for us. Where was the complexity cost hiding?
Well, a huge chunk, $440,000, which is 25% of her total overhead, was purely batch level.
So that's just the cost of stopping and starting the machines over and over again.
1,000 separate times for 1,000 different batches. It's all just friction in the system.
And what about the cost of just being a gourmet shop? The flavor variety?
That accounted for another $270,000, or about 16% of the total. That was the product level overhead. The price she paid for complex recipes and all those special ingredients.
Let's just pause on that for a second. If you add the batch costs and the product costs together,
You get $710,000.
$710,000. That's over 40% of her entire overhead budget that was just completely invisible to her before.
It's the economic reality of her business model. Every time she added a fancy new flavor, she wasn't just adding the cost of some spices. She was adding this enormous process burden that was costing her almost $750,000.
And she probably thought, as long as the new flavor sells, it's a success, never realizing that the very act of making it with all those small batches was costing her a fortune.
And remember that insight from the sources, that $440,000 in batch costs would basically just vanish if she only made vanilla. It's a direct price tag on offering variety.
Okay, so understanding where the costs come from is one thing, but now you have to actually do the math. You have to allocate it.
Exactly. Now we move into the mechanics. We've built the pools. Now we need to calculate the rates.
The cost drivers.
The cost drivers, yeah. For each pool, we need a rate.
So let's run through the numbers from the source material.
Okay. For the unit level pool of $750,000, the driver is total gallons. She made 1.5 million gallons. So you divide one by the other.
And you get 50 cents.
$50 per gallon. Sure. Simple. Every gallon costs 50 cents in unit level overhead.
Okay, what about the batch costs?
That was the $440,000 pool. Yeah. The driver there is the number of batches, which was 1,000.
So 440,000 divided by 1,000, that's $440.
$440 per batch. And that number tells a story. Every time you stop that production line to change flavors, it's a $440 charge against your profit.
That is a huge lever for management. It immediately tells you that a tiny 50-gallon batch is, a financial disaster compared to a big one.
Absolutely. And then for the last one, the product level pool, that was $270,000. The driver they chose was the total number of unique ingredients,
which was 270.
So the math is easy on that one. It's $1,000 per ingredient. The more complex the recipe, the more it costs.
All right, so those are our new measuring sticks. 50 cents a gallon, $440 a batch, and $1,000 per ingredient. Now for the payoff. Let's apply this to the two extremes. Simple, high-volume vanilla versus the complex, low-volume gingerbread cheesecake supreme.
Let's do vanilla first. It's the workhorse. Only 5 ingredients, but they run 500 batches to make a massive 500,000 gallons.
Okay, so let's apply the rates. The unit cost is 500,000 gallons times 50 cents. That's $250,000.
Okay.
Then the batch cost, 500 batches times that big $440 number. That's $220,000. And the product cost is tiny, 5 ingredients times $1,000 is just $5,000.
Add it all up, and the total ABC overhead for vanilla is $475,000. Now, you spread that over 500,000 gallons.
And you get 95 cents per gallon. 95 cents. That's our baseline.
That's the true cost for the simple stuff. Now, let's pivot to the gourmet flavor. Gingerbread cheesecake supreme.
Way more complex, 25 ingredients. And it's a niche product, so they only run 100 batches all year for a total of 50,000 gallons.
So the unit cost is small, right?
Yeah.
50,000 gallons times 50 cents is only $25,000. But look at the complexity costs.
The batch cost is 100 batches times $430, so that's $44,000.
And the product cost, because of all those ingredients.
25 ingredients times $1,000 each. That's another $25,000.
So the total overhead for the gingerbread flavor is $94,000. And when you allocate that small number across a very small volume,
The per gallon cost just explodes. It comes out to $1.88 per gallon.
here it is. 95 cents versus $1.88. That's the smoking gun.
It costs almost exactly double in overhead to make the fancy flavor, just because of how it uses the factory.
And here's the kicker. Under the old traditional system, Lily would have just used one average rate for everything.
Right. Her total $1.74 million in overhead divided by 1.5 million gallons, that comes out to $1.16 per gallon.
She thought every single flavor cost her $1.16 in overhead.
So when you do the final comparison, vanilla, her best seller, was actually being overcosted. She was penalizing it by 21 cents a gallon.
She probably thought it was less profitable than it really was.
And the gingerbread cheesecake supreme, that was the real problem. It was being massively undercosted by 72 cents a gallon.
For every tub she sold, she was losing money and didn't even know it. She was basically taking the profits from vanilla and using them to subsidize her gourmet line.
This is why she felt busy but not rich.
It's a classic story. And this is where ABC stops being an accounting exercise and becomes a powerful management tool.
Because now you can actually do something about it.
You can. First, you can fix your pricing. You know those gourmet flavors need to be priced much higher to cover that $1.88 overhead rate.
Second, you can look at your product mix. You can see which flavors are just eating up resources without selling enough, and maybe you get rid of them. That directly attacks that $270,000 product level cost.
And maybe the most important one is process improvement. You now know you have a $440,000 problem related to batch changeovers.
So you can start projects to reduce setup times, schedule better, whatever it takes to attack that specific cost.
Exactly.
Okay, but let's be realistic. If this is so powerful, why doesn't every single company do it?
Because it's hard. And it can be expensive to set up. You have to map all your activities, you have to train people. You might even need to run 2 different accounting systems, one for the bank, one for you.
So it's a trade-off. Clarity for complexity.
It is. For a simple business with low variety, it might not be worth the trouble. But for a business like Lily's, which is all about variety, that $710,000 in hidden costs made it absolutely essential. It stopped her from chasing the wrong things.
So this deep dive really shows that activity-based costing isn't just about crunching numbers, it's a mirror. It reflects the true economic reality of your business.
It shows you where the money is going based on how you operate, not just what you produce.
A perfect summary.
And to leave you with one final thought, let's go back to that $710,000 in hidden complexity costs. We know $440,000 came from batch frequency, and $270,000 came from ingredient variety.
Right.
If you were Lily's manager today and you needed to boost profits fast, which of those 2 levers would you pull first? Would you try to reduce the number of ingredients you use, or would you focus on reducing how often you change over the machines? Which one gives you the biggest, fastest win?
Something to think about in your own world. Thank you for diving deep into the economics of complexity with us. We really encourage you to start looking for these cost drivers in your own field. We'll see you next time.